Welcome back to Ask Allison. I am here again with my friend Andrew Reeson. We are coming at you live all about taxes because now is a great time to be talking about taxes, but I promise we're going to keep it fun. But first, I want to start by thanking our sponsors because that's what part of how we're able to be here every week. So first, I'd like to thank TherapyNotes. They are the #1 rated electronic health record system available today. With live telephone support 7 days a week, it's clear why TherapyNotes is rated 4.9 out of 5 stars on Trustpilot and has a 5-star rating on Google. TherapyNotes makes billing, scheduling, note-taking, and telehealth incredibly easy. And for all you prescribers out there, they also have ePrescribe. If you're coming from another EHR, TherapyNotes makes the transition incredibly easy, importing your demographic data free of charge so you can get going right away. Find out what more than 100,000 mental health professionals already know. Use promo code ABUNDANT at therapynotes.com for 2 free months. And I'd also like to thank Herd, not just for being here and answering our questions, but for sponsoring us. As a therapist, you're probably too preoccupied with your caseload to want to think about bookkeeping and taxes. Herd is a full-service accounting software platform built specifically for therapists that help you track and improve your practice's financial health. Regardless of whether you're a seasoned clinician or you're in the first year of your practice, Herd will help you identify areas for growth and streamline best financial practices for your business. When you sign up with Herd, you'll work directly with financial specialists to track your income and expenses, file taxes online, and grow your business. You'll also receive financial insights such as profit and loss statements and personalized monthly reports. Say goodbye to poring over spreadsheets and guessing your tax deductions or quarterly payments. Focus on your clients and Herd will take care of the rest. Schedule a free 15-minute consultation at joinherd.com. Andrew, thanks for being here again.
Very grateful. Very grateful. Excited to be here.
So we have another question. I'm really interested to hear your answer because I feel like the answers that I've heard from different people's accountants are all over the board. So here's the question. Allison, you've talked about S Corps before, but I still don't get it. Can you tell me like I'm 5 and when should I become one?
Yes, absolutely. So zooming out is probably the best place to start and where I always like to start around these types of conversations. So there are a number of different types of business entities that you can be. You can be a sole proprietor, you can be an LLC, you can be a PLLC. In California, as a clinician, you have to be a professional corp. So that is a potential entity, a C Corp. An S Corp, which is a common misnomer, is not a type of business entity. It is a designation with the IRS where you're going to them once you've structured a business entity like a PLLC or a professional corp, and you're telling them, hey, I don't want to be taxed like, a C Corp or like a disregarded entity like a sole proprietor where I'm paying self-employment tax. I want to be taxed like an S Corp. And why people make the determination to become an S Corp is because you're able to separate yourself as the owner of the business and the employee of the business, which you're like, what the heck does that actually mean? And so as a sole proprietor, you're a pass-through entity, which means that all of the income that you're earning passes through back to you as an individual. And you have what's called a Schedule C on your individual tax return, which in layman's terms is just a business profit and loss for your sole proprietorship. And as your practice goes, there's this, small business election that you can make to be taxed as an S Corp because it provides tax advantageous benefits for you as a small business owner that's growing. And so what that means is when you make the election to be taxed as an S Corp, you're telling the IRS that, hey, I'm an owner of the business and I'm also a shareholder or employee in the business as well. And so as the owner of the business, we're making money, we have expenses that we're paying, and then we have payroll that we're paying to Allison or Andrew, the employee of that practice. And then we have profit in that practice. And so the payroll of that practice goes to Allison or Andrew in the practice who are working in the practice, but the profit goes to Allison, the owner of that practice. And the big difference here is that as a sole proprietor, you have all of that income that passes through back to you that you're representing on your Schedule C or your business profit and loss, but you're paying not only federal and state, and shout out to my New York City folks, local tax or city tax as well, but you're also paying self-employment tax. And I know that there are people on this call that have come into this situation probably in their first year of being a clinician of being like, holy shit, I paid a lot of taxes this year and I did not anticipate paying this many taxes. And so people become an S Corp at a certain point of income because they'll be paying those self-employment taxes. We'll think about that synonymously as payroll taxes against the wages that they pay themselves, but against the profit, they're just taking a distribution, and that shows up on your tax return as what's called a K1 or a Schedule K. And so it's passing through back that income, and you don't pay self-employment tax on that. And so to put together a pragmatic math equation really quickly off the top of my head, let's assume that you make $100,000 in your practice. You decide that, hey, $50,000 is a reasonable salary. Against that $50,000, you'll be paying federal taxes, state taxes, and again, hey, New York City people, city taxes, plus the self-employment tax, but that is actually payroll taxes. And that income or the profit in your practice, that passes through back to you, and you're only paying federal tax, state income tax, and again, New York City people, city tax as well. And so the savings in this example, let's imagine you're taking $50,000 of profit. The savings is 15.3% against that $50,000 of profit. This is very simple math that is not inclusive of the fact that there is a self-employment deduction and there's qualified business income and all these other things that make that equation a little bit more complicated. And it is tailored to the individual and what's right for them. But there is a benefit in specific situations when an accountant has all of the facts and circumstances to help somebody understand if it's beneficial for them. I think the dialogue externally in listservs and Facebook groups is like, oh, it's 60,000 or it's 80,000 or it's 100,000 when it makes sense to become an S Corp. And there may be truth in that for specific people, right? But it's not taking into account all of the factors of who that individual is as a taxpayer, because there are many things outside of just the individual in their practice that account for that broader tax picture for the individual. And so when it comes to S Corps, having a conversation with an accountant, this is one of those situations where I would say it's always going to make sense. And then I think the second layer of this, where we often get questions, is like, what is a reasonable salary? And I'm sure folks have asked that in your community as well. And you could go to 50 different accountants or 100 different accountants, and they're gonna, tell you, 50 or 100 different answers. And they'll probably start by listing off a number of qualitative things of like, well, it's where you're located and what your licensure type is, and, what X, Y, and Z are as well. And I think, typically what they'll often get back to is, in this balance of 40 to 60% or more or less in certain circumstances of salary against overall profit. But again, have this conversation with somebody to really understand if for you it makes sense in your practice, and understand as well, if you're talking to a professional, what those costs are, because they can add up really quickly as well. So don't be afraid to ask the questions that you might perceive as silly.
Right. And that's an interesting thing. Like if you're talking to an accountant about it, an S Corp makes more work for your accountant. I wouldn't try to DIY an S Corp.
Yeah.
Not nearly DIY anything around money, but like definitely not an S Corp. So it's not just like a one-time setup, it's ongoing work for your accountant. And so it's going to cost you more in accounting fees in most circumstances.
Yeah.
Which is okay because it's going to save you way more than that in taxes. Yeah. So S Corps are awesome in my experience. And talk to your accountant. And what I'll do, the worksheet for this, the free worksheet for this, Ask Allison, I'm going to lay out that math and just kind of like write it out so that you guys can see, because I know math when you're listening is not the easiest thing to picture. So I will make a worksheet of this so you guys can kind of follow along on how this is advantageous for you.
Yeah. Another piece to add there, because you just kind of brought it to mind, is a conversation that we often have with folks when they're coming in. Because a lot of folks will come into like these initial consultation calls that we have and be like, I want to be an S Corp. Or like mid-year, they're like, does it make sense to transition to be an S Corp? And once you have that conversation and understand, there is a line, to your point, Allison, of like where administratively, yes, there's going to be more work for your accountant, and your accountant will feel good about that because they can charge you more as they are a business. But for yourself administratively as a business owner, there will also be more work and there will be changes, and understanding the compliance changes, like, you know, in California, there's a minimum tax that you have to pay, right? And a franchise tax associated with becoming an S Corp. So understanding the full picture and asking those questions to your accountant of, okay, I'm in, you know, X state. What specifically does this mean for me? And what will that process look like for me as a business owner as well? What is the additional work I will have to take on top of the additional work that you'll have to take on? But yes, in many cases, they are quite beneficial, but think through the factors of how your work life might change as well.
Got it. And so if somebody is working with Herd and they're doing their bookkeeping and they're doing their accounting, what does that extra work look like for a therapist?
Yeah, so great question. So for somebody working with Herd, we're going to be doing your bookkeeping on the back end. So we have a bookkeeping team. We will help you set up payroll through the payroll service that we just launched on our platform, which is exciting. So we'll help you determine reasonable salary. We'll help you get connected to a team that can set up the state registrations, because that's oftentimes the most arduous part of the payroll setup process. We'll help you calculate quarterly taxes and then file the returns at the end of the year. So transparently speaking, like the engagement that we will need is like fairly low from the provider, but the things that they will need to do are, you know, uploading bank statements for the bookkeeping work, helping us understand if they're bringing on new folks to their, you know, practice from a payroll standpoint, you know, collaborating with us on a quarterly basis to make adjustments to the payroll and the reasonable salary and what makes sense. And then of course, anytime you're going to file a tax return, there's going to be a hands-on experience of both parties in the process of providing that material.
I will say though, as somebody who uses a bookkeeper, accountant, company, every year I put it off and I'm like, oh, I got to get all this stuff together. It's gonna be awful. And it literally takes me maybe 10 minutes to actually get it all together and submit it. And I've just drug my feet for like months instead. So yeah, it's a little bit of work, y'all, but you spend more time putting it off than you do getting it done. So awesome. Okay. Well, thanks so much. I look forward to next time.